Yeah, can you believe it's 2025? I cannot. I cannot. I
I was in
remember
banking in 1999 and we were so freaked out over Y2K.
I know,
Seems
right?
like yesterday.
got there, and I remember the sci-fi movie 2010, watching that when I was in middle school. And it was like, oh yeah, it's going to be crazy in 2010.
Party like 1999, right?
Exactly. Hmm. So, all right. Kevin, do you remember the 70s? The 80s?
Yeah, no, I didn't.
He's heard about him.
Yeah, that's when
They're pretty
Y2K
awesome.
and 2010 were big deals. That is awesome. All right. Well, good grief. It's a brand new year. Um, and I kind of, again, I don't want to, go down any paths of introducing, really new stuff. I want to drive home fundamentals over and over. Um, if there's any one thing that I can share, maybe in the past, maybe 60 days, is really focusing on a lot of the stuff we're talking about. And the most important thing, well, there's two. I'll start with one technical and then one not so technical, but the technical most important thing that and we're all wired different. Um, but that slow it down to speed up mentality is proven to be so valuable. And technically, size is what has been made trading so much more enjoyable for me. Um, and I think Sean had kind of put out a little question the other day, and I just kind of hastily responded, and it was just exactly kind of what I've been doing, how I've been doing it. But I'm I went through a time where I couldn't stand, trading small size. It was boring, and it seemed to take forever. Um, but I but I trade small on a 25, and I utilize a 25 as a lead account almost exclusively. And I do that because of the psychology. You know, I just trade one micro, a 25K account, and I kind of leave the other ones off. And I'm like, hey, I've got over 100 points to mess with. That's my goal. If I lose 100 points on one micro, then I've hit my loss for the day. I'm done. And my goal is it's actually 1-to-1. If I can achieve, a net gain of 100 points, I'm done. Done trading for the day. So, but what that does is my 150K accounts, they got three micros. 250K accounts got four micros. And I use those ratios just based on, hey, a 10% drawdown or, $150 in a 25K account. Well, that's 10% of a $1,500 drawdown. Where or a third is 150 of 1,500 is no different than 500 of a 5,000. So basically 150 times 3 is 450. And so 500 becomes, if I lose 150 in a 25K account, that's the same as losing 450 in a 150K account with a $5,000 drawdown. You see the 150 times 3 is 450.
Mhm.
So a $1,500 drawdown in a 25K account versus, let's just say if it was 4,500 drawdown in a 150K account, that'd be a 1-for-1. So you actually even have a little more cushion in the larger account. Okay. And so I don't even worry about, if I'm down, three times as much in the larger accounts. I'm really just kind of ruling those out because I know if I can win the small one micro 25K account, my big counts are doing great. And
You have them all copy traded? Is that what you're doing?
I do.
Yep.
I don't do them all at the same time, all at once. Which kind of is going to lead. There's two things I want to go over on charts tonight. So great. I'm glad you kind of highlighted that because I do not copy trade really like the opening range or my first trade of the day. That's usually, one of my larger accounts, usually like an evaluation or something. I am a lot more cautious because I just finding out I do so much better, later on if I can wait 30 minutes to an hour. And the reason is what I'm finding out is like, hey, in that first hour, I don't know if we're trending or if we got a range. And identifying, if the session, at least for that first half of the session, is it just ranging, or is it actually going to trend, most of the session, meaning it's going to continue making kind of higher highs with some healthy normal pullbacks, but just ultimately at the end of the day, it's a decent sized bull white candle, or is it going to be a decent sized, bear candle, and usually in the first hour, you can kind of identify that. Range is it might be a white, or it might be a black, or it might be a bear bull candle. But a lot of times that's that inside day candle. Okay. And that's, I kind of want everybody to chew on that a little bit, because that is really kind of transformational. Because we've talked a lot of times about how, hey, there are some folks out there that will not trade that first hour, for that reason. I struggle with that, just due to the fact there's so much opportunity, in that opening range, and just, that in that first hour, you're breaking to basically the low of the day, and then you're going to range and go sideways, or it's going to reverse, or it's going to break to the upside, and then it's going to range and go sideways, or it's going to, reverse, or continue up. And so those prices at that, 1 hour, be it the upper or the lower limit, a lot of times your high volatility move is over. So now you're just deciding, hey, is it going to range the rest of the day and kind of go sideways, creep a little lower, creep a little higher? Is overall market bullish? Therefore, hey, I really want to get in on the lows, and as long as my take profit is between where I enter and VWAP, yeah, I should feel pretty comfortable. And the same thing at the top, if I can get in at those highs, and it's like, hey, I feel like this is just losing a little bullish momentum, and man, look at my VWAP clear down there. The volume's not real strong. Much rather get in on a wick short, and if it's going to break down, it's going to usually break back down towards that, where the institutions and a lot of volume has occurred, through that day. And those are, some additional, I think, very important reasons to understand why that 1 hour, does add some value, So because of so much additional clarity that can come after that initial balance low or initial balance high, that's when I go into the copy trade, and I'm finding out I actually do better in a range than I do trending. And it's like I don't have confidence on the trend. I'm always expecting, when it's taken off bullish up away from VWAP, that it's just we're gonna have a 150 point bear candle come in and take it all out. Just seen it happen so many times, so I take profits off the table, but it just kind of keeps going high, and then I have a hard time really getting some good entries, as it keeps going higher, and the same thing even when it keeps going lower. But when it starts ranging, you have your big 150, 200 point move to the upside or downside, and then it just tends to kind of go sideways the rest of the day. Dang, that's really where I'm doing well, and I'll just get in on the upper part of that range and take profits on its way back down. And same thing at the bottom, just get in at the bottom, and because if it does roll over at the bottom, if you're very extended, away from the 50 SMA, you're extended away from the VWAP. Yeah, it may create go to one of your larger time frame support or resistances, but again, that's where that small size is so cool, because it I mean, it takes, 100 point. If it goes 100 points before I add anything, that's just not an issue, because then when I put in I go ahead and add a, DCA add one size. Well, now I've only got, 50 more points to get back, and it just time and time again, that it does come back. So, but I third of the drawdown is where I will call it quits as far as adding, because that's always recoverable. But anything more than that, yeah, you lose a lot of days to try to get back, so. But again, don't like being in on the wrong side of the trade either, because then you just got to work all day long to even get that break even or profit back. So that's kind of what I wanted to share. So copy trading is generally later in the session. And I kind of utilize a small size on a small account, and I'm going for 100 points, because if I can get $200 in a 25K account, well, I'm getting over 600 in a 150K account, and I'm getting 800 in the 250K accounts. Here's some other cool math. Okay, you look at 150, even at $150 a day. Well, let's just go 200. $200 a day profit on a 25K account. Okay, so that's not a good math. Let me use the 50K because that's really where I come up with this. So I got one Top Step account that I bought a new Top Step just for fun here right around the holiday. That was my Christmas present. And $3,000 take profit. Okay, it's got a $2,000 end of day drawdown limit. So in Jake's mind, I'm like, slow it down to speed it up. All I'm doing is going for $200 a day. I don't care if it's 4 $50 wins, 2 $100 wins. If it's range, if I can get in there on a trend and be done, cool. 15 days funded. Okay, it actually did do that today, believe it or not. So 15 days. Well, utilizing the same approach, let's go at 150K account. And when you start looking at 9,000, that's what it takes to pass an evaluation. Do a little bit of math here. So I got the numbers all messed up in my brain. Okay, so 9,000. Let me go ahead and share a screen, and I can kind of show the calculator here a little bit. Oh, I lost you. You guys still see me?
We can see you.
All right. I minimized y'all. There you go. I found you. There you are. I heard you. Rhonda.
I'm here. Hello.
I lost y'all. All right. Got you back. Okay. What are you guys seeing now? Just screen? Calculator?
Yep.
Cool. All right. So, and again, here's a concept too that I like, because one of the problems, at least I had, and I want to kind of share kind of a simplicity of these larger accounts. You're like, man, I've got to go so far to pass an evaluation. Okay. Well, if you're looking at a 50K account and $200 a day is your objective, okay, and you got a $2,000 drawdown, so that's basically 10% of your drawdown. But $200 at 15 days, that's just 3 weeks. Okay, slowing it down to speed up. You got basically 100 points that you want to try to win by trading support and resistance, utilizing your strategy. If you take 20 points here and there, multiple trades, if you get in a range, the goal is, hey, can I take 100 points off the table every day? And that, again, this is even just with one micro. I like to, if I'm comfortable in the range, I'm comfortable in the trend, I will actually do 2, because I will always keep one going. And then I will take small little little profits off the table with that extra one. In other words, when a candle pulls back, I'll add one and I'll take a profit 10, 15 points. If it pulls back, but if I'm making higher highs, you know, then I've still got that continuity of that one micro. Hey, once you hit 100 points, brother, sister, you know, we're done for the day. Okay. And so 15 days, that's 3 weeks. You know, if you got another valuation account, other accounts you're trading, load them up, do whatever you want to do, work on Globex, but per your trading plan, your playbook, execute your plan, and make sure you have 1 to 2 accounts that you are taking care of. This is my bread and butter. This is how I'm going to pay for my trading. And you've got to treat it like a business. You can't just try to rush through like an evaluation and then think, okay, I'll slow it down once I get to the PA. You really, that's where you're going to master kind of that self-control when it is funded. When it is funded. All right, so $200 with the 50K, 15 days. Well, if we're copy trading and we've got $600 becomes the objective for the day, the target or to pass an evaluation on a 150K account in Apex is 9,000. Okay, so again, it's still 15 days. Okay, 15 days seems like a long time. Well, it's not. It's 3 weeks or 3 net, you know, 15 net days of 200. Maybe you're going to have, I had 3 days in a row where one day was $3.22, another day was $4. But I'm like, you know what? Cool, Jake, you're not losing. I didn't have to make up a day. But pass an evaluation of 15 days when the objective or the target was 9,000. Well, now here's where the larger accounts are kind of cool, because once you pass an evaluation, say it takes you 15 days, just trading 3 micros on a 150K account, you know, 100 points, 3 weeks. And if you lose 100 points and you walk away, you've only lost 1 day. Okay, here's what's kind of cool, because a payout on a 150K account is 5,100. Once you achieve 155,100, you can request a $500 payout in a 150K account. Okay, just keep doing what you're doing, divide that by 600. You're just shy of that $8 minimum day payout requirement. So you're even training to maximize, you know, hey, to receive a payout nearly that 8 days. But, you know, $637.50 is how you're going to hit $5,100 in 8 days. I mean, you can add a little bit there, but maybe I'm preaching to the choir here, but I think it's important to kind of understand. It's like, hey, we can trade very freely, you know, like with 3 micros, no different than like 1 micro. Hey, can I trade? Do I have enough skill where more days than not, I'm going to be able to pull 100 points off the table? That's our goal. That's why we train. That's why we back trade. That's why we look at the highs and the lows of these wicks. Do we have a sense in the direction? You know, and our goal is how can, even if it takes 4 trades, even if it takes more than that, you know, can we pull 100 points off the table? Because 100 points off the table, you're going to pass a 150K evaluation in 3 weeks, 15 trading days. 25K account, again, a $200 or $150 win is a big day in a 25K account. I mean, that's 10% of your drawdown.
How much do you have to leave on the table on the 150,000 accounts? So if you get to 155, 100, what can you take out of there?
You can take minimum withdrawal is 500.
What's the maximum?
If you're at I'll just look at the 500. I want to say it's 500. If you're at you know, just hitting that $100 over
So you're
Or-
155,
you-
100.
Yeah, because it's 5,000 is your target. So you got to have the 5,000 plus that 100 above
Mhm.
that initial balance of 150,000. And then your trailing drawdown's done.
What's your
You can withdraw 500 on that first withdrawal. Once you're beyond that 5,100, let's say if you go up to, you know, 6,000, well, you can withdraw all the way down to that really 500 below the 55 or 5,100. Okay, even if it's a 25K account, your target is 1,600. You can withdraw $500. You can't withdraw more than that.
I was looking for all those numbers and I couldn't really find them anywhere.
It's right on there. Don't just go right to the ATF.com. Don't even log in, and you go to help, and there's a lot of great information. Don't
the
even log
questions
in.
there.
Just do a little search on their payouts, but they will allow you to withdraw up to 500, and then anything over that initial withdrawal, like 500. In other words, like if you get to 26,600, which is $1,600 on a 25K account, you can actually withdraw 500. Now your drawdown is hindered by 400 at that point, but they allow you to take some profits off the table. Now, if you go up to like 27,000, well, you can not only do you have that 500 that you can withdraw, but anything over that. So you could actually withdraw that additional 400. So you could withdraw 900 on that first one.
On which account?
On the second 25K account.
25K?
Yeah. So on that first withdrawal, you have to exceed that target profit by $100.
So
you can
basically
withdraw
on the
up to 500 and no more than 500.
okay.
Okay. Now, anything above and beyond that initial target plus 100, you can withdraw that also in addition to that 500.
So
But
in
if
the
you just
50K
hit
account,
that target profit, that target where you can do a withdrawal, the maximum withdrawal is going to be 500. But if you go over that, then you can actually withdraw everything over that, plus that initial, which will kind of put you in drawdown for that first one.
because once you hit target on the 50K account, it's 3,000 to pass, right?
3,000 to pass an evaluation,
Yeah.
and then 52.6 to be able to withdraw $500. I'm sorry, yeah, that's right, 52.6.
To pay out.
Yep.
And then you
So
can
once you hit,
never let it go below 50,000 again, or
that's exactly
52.6.
right.
50,000?
Yeah, well, it'll be locked in at because once you hit 52.6, you're actually locked in at 50,100
Oh, I see.
because there's your $2,500 drawdown. So you
Right,
can
right.
withdraw $500,
Yeah.
52.6 down to 52.1, and that leaves you basically a $2,000 cushion.
Mm.
You know, if you withdraw at 53,000, then you could actually withdraw 900.
So how about I couldn't figure out the 150K account, 9,000 to pass,
Yep.
and then 150 or 50,000, 155, 100 to pay out. So
Yep.
what do you have to always leave on the table there?
Well, you can again withdraw that 500, and then you're locked in. Your balance. What you must always leave on the table. You can't withdraw on that more than 500 on that first withdrawal.
Mm-hmm.
And then I think it's like 50%. Going forward to that. Be wrong on that. I always take 50% out. You're limited to how much you can withdraw. In other words, you got 8 more days of trading.
Right.
Okay. And so you can then withdraw, because your balance is locked in at the 150,100. It's done trailing. But I just look at taking 50% of profits on my payouts.
Mm-hmm.
because I don't like trailing drawdowns.
Right.
But
Yeah.
but it's very important to get that first payout when you can, and then start paying yourself regularly. Now, after 3 months, you can withdraw the whole thing and close the account. There's no limitation on how much you can withdraw.
Hmm.
You know, I think it's like eight paydays and stuff now. I think they managed
Yeah.
a little bit, but I don't want to get wrapped up into a lot of those details because those are on the website. But I think it's real important to correlate. You know, a 150K account, hey, 3 micros is no difference in trading 1 micro, you know, in a 50K account. The goal is 100 points. You can trade, if you can obtain 100 points on most trading days, it's 15 days to pass an evaluation on both of them. What makes the 150 and the 250Ks kind of cool is when even that 250K account, okay, 1,000 a day is the goal to be able to pass that evaluation in 15 days. Okay, I only shoot for about 800 on that and lock it down, just due to the fact that risk to reward. In other words, 650 is 10% of that drawdown, because it's a $6,500 drawdown. Okay, so that's the same as 1 micro at 150. So it's actually $600 drawdown. So the math is there. I just trade usually 5 micros and the 250. But when you got, let's go to you got to go all the way to, you got a 250K account. You got to pass an evaluation. You got to go all the way to 15,000. So you got to go all the way up to 265. Well, that 15,000, you know, divided by 800, $18.75 days. Okay, so there's 4 weeks, a little over 3 weeks. Okay, and that's just 800. But once you pass that evaluation, you only got to go to 6,600 for your first payout. Divide that by 800. So once you pass the evaluation, now you're only talking 8.25 more days. So again, that's the number that I'm looking at, is how can I, you know, make sure what is, especially on that first payout, I want to hit that first payout target. So I divide by 8, and this is kind of comes into 8.25 days, but I'm trading a small size, and I'm consistently doing that as I trade the evaluations. Okay, it might take 18 days to pass an evaluation, but it's only 8.25 for a first payout on the larger accounts. You go to the 50K account, okay, it takes you 15 days to pass an evaluation, but then you still got 12.5 days before your first payout, because you got to get up to 2,600 or 13 days. So we're still dividing out by 200. So the smaller accounts actually do take a little bit longer to get a payout on. By trading the same amount of risk and exposure. And that's where I kind of want to share that, hey, if it takes 15 days and you lock in, you know, where you're consistent to be able to say, you know what, I am finding a way to earn 100 points a day on most trading days. And that may sound pretty large, but it's really not. And I definitely want to go through a few charts today. 100 points is not a difficult goal to achieve if we're waiting for the right setup. Now, if we're down 100 points because of opening range, then it becomes 200 points, you know, and then it becomes a little different day. But I think it's real important in this slow it down to kind of speed it up is I don't want folks to be intimidated by the larger accounts because it's such a larger target to pass an evaluation relative to the 50K, let alone the 25K. they're no different to pass an evaluation. 15 days in a 150K account, you're risking less than, because you're only trading 3 micros, going for $600, where in a 25K or a 50K account, you trade 1 micro is going for $200. And I actually lead with the 25K account. I don't lead with my top step, but I still go for $200 in the 25K account. But when I pass a 150K account, I'm going to get to a payday a lot faster in that larger account than I'm going to in my smaller 25K account. Because again, I'm just going to grind away, going for 100 points a day, $200 a day. So it takes me 13 days to get a small payout in a 25K account, where 8.5 days I've got to pay out on the larger accounts. And that's pretty powerful, because when you start copy trading and start looking at, hey, what is 2 and 3 150K accounts at $600 a day add up to, versus 2 to 3 50K accounts at just $200 a day. And your risk is actually no different between the two. You're not exposing yourself. You're actually exposing yourself less. Now, when we compare to the 50K, it's 1-to-1. Any questions on that? I mean, to me, I love numbers. I love math, because then I have a reason of why I'm trading a larger account. I can slow myself down. I'm like, good grief. If I know that in 3 weeks I'm going to pass 25K accounts or 50K accounts, no problem. And I've done that. But all of a sudden I'm realizing, wait a minute here. I can trade these larger accounts, and then the normal winning day is quite a bit more than a normal winning day in a small account. That's what compounds over time. And I'm like, good grief. And I just put on 3 micros on the 150, 4 on the 250s, and I just focus on my $200 net win on 1 micro. I manage 1 micro, and I'm just trying to go for $200. At the end of the day, I've got 6, 6, 6, 8, 8 on all the other accounts. And that's fun. That's been fun. Now, how do we do that? How do you come up to where you're going to consistently win just $200 a day? And then that's all we're trying to do on a smaller account. With 1 micro, can we win $200 a day? That's the challenge. So that, price opened up here at 21,795, and we come all the way down here to 292. So 792 down to 292. So there's 500 points there. And this was not a crazy day. Okay. Opening range pretty flat going across. You got your first 5-minute candle. You got your second 5-minute candle. Is this one of those liquidations and it takes off and goes this way? One of the things I kind of want to highlight is how valuable that third 5-minute candle can be over and over again. Because this third 5-minute candle, that's 15 minutes in the market. Okay, it looks somewhat bullish, but we got to take out a new high. So this tells us right here, okay, we're right in the middle of our first opening candle. I'm not doing anything yet. But what do these next 2 candles tell me? This is what makes or breaks the day. Here's Anthony's favorite wicks. He's like, hey, these were full bullish candles there for a minute, but they could not take out this opening high. They could not break through this long-standing 4-hour resistance. And now I'm below VWAP. I'm below, this happens to be the 200, which is a 50 simple moving average, and a 200 are very similar. Let me go back here to my 50s. All right. Same thing. All these are right here, as if you can see that. This red line is very similar to a 10 EMA. And what I've done is I've got it locked to on a 1 minute time frame, 50 simple moving average. But this red one tells me, hey, if I was trading the 1 minute, this is 51 minute candles. That's the red line. Okay. If I was to trade the green line right here, if I was to, that is always locked in. It's a 50 simple moving average, but if I was trading just on the 5 minute time frame, here is my 5 minute 50 simple moving average trend. So that is a little different than anything I've shared before. I'm like, hey, 50's pretty consistent. I like it. But instead of jumping around, hey, what's my 50 simple moving average doing on the 1 minute? What's my 50 simple moving average doing on the 5? What's my 50 simple moving average doing on the 15? I just keep them always up in front of me, because when we're below all our 50s, okay, that's a very strong, just a visual confirmation of what we already know by just looking at the candles. But I'm not going to go short when I'm below the 50 simple moving average 1 minute pointing down. I'm not going to go long, excuse me. Does that make sense?
Mm-hmm.
We start getting above this 1 minute 50 simple moving average. It doesn't matter what time frame I'm on. You know, if I happen to be in the 15, if I happen to be in the 5, this red line is taking 51 minute candles and telling me where price is relative to that. Okay, that's a way. How can I help myself have net gains of 100 points a day? Okay, one, I'm going to enter as close as I can to this 1 minute 50 SMA. And when I'm below the 5 minute 50 SMA, let alone the 15, I've got strong directions like, hey, dude, only go short. Probably pretty wise to only go short under those conditions. Okay. And as long as I'm staying below this 5, let alone this 1 minute, I'm comfortable going short. Okay, when I get way down away from this 1 minute, I'm not comfortable going short down here anymore. Zero. In fact, this is where I start. Really, I will look at, if I've got a big move like this, I won't even hesitate to go long, because one, I'm so far away from my 50 simple moving average, 1 minute, let alone this purple line, my VWAP. I'm way below that. But if I'm trending down, you know, I'm not looking going long up in here playing this breakout. No, those days are over. I don't want to play a breakout. You know, I'm above my 1 minute, but I'm below this thicker orange is the 1 hour 50 simple moving average. If I'm going to go long, I want to get in at the bottom part of where price has been kind of getting rejected. That's where I'll go long, to work back up towards the 50 SMA, back up towards the VWAP. The breakouts, I'm tired of the breakouts. Because if I was to play a breakout on this bear candle closing above this, we'll call this a 10 EMA, it just wicks me in and then rolls right over. You know, and then I'm relatively safe most of the time, because if I come down to here, and if I entered here, well, my average entry price, all I got to do is add an extra micro right here. Well, now my average entry price is right here. Well, I'm profitable again here. Did I lose anybody there? Because that's real important. I mean, that's again the nice thing about one micro, you know. And again, this is just on the one account, not worried about, okay, now I'm at 6 micros in another account. Okay, now I'm at 9. I'm not worried about those, because there's no different risk or exposure on 3 micros on a 150K account than 1 on a 50K account. Or there's no difference between 6 on a 150K account than there is 2 on a 50K account. But how am I ensuring that I'm going to get 100 points, you know, 9 out of 10 days I'm trading? Okay. And that's just, I'm not going to go I'm not playing these breakouts. If my trend is down and I'm below, this green is a 5 minute, this thin, here's a 15 minute, and I'm below VWAP. Okay. I'm only looking to go short. And again, with the caveat, when I'm extended way below this 1 minute, here's where I would go long. Okay, I would go long here. These lower highs here, the long game is kind of over. I'm looking at going short on these right here, and looking at going short down into this support area. And look, and this is a 15-minute time frame. You got this nice indecision here, breaks down in here. We come back up to this 4-hour resistance. Well, right here is 550. You just kind of watch that right there. It doesn't break above that. So I mean, if it goes against you up here, you're wrong. But you got your VWAP up into here. But you're playing your trend. But 550 right back down to this area, that's 412. I mean, there's your 130 points right there, going back and forth. And again, I don't really make entry decisions on the 15, but I was just kind of showing that to kind of highlight one of the things this is relatively new, but I really want to know what my 1 minute is doing. I've learned to not, I don't want to go short when I'm above this red line, for the most part. Once we get way extended above it, that's a different story. But I'm not looking to break out, or I'm not looking at, I do a lot better if I trade on the side that my 1 minute 50 SMA is. I do a lot better. Wait till price to come back down to this, then look at going short. I do a lot better. Wait till it's back above. Do a lot better, because a lot of times if the trend is down and I go long right around here and then she rolls over, then I'm chasing it all day. And again, that's just a way, just a way. A probability of being able to take profits off the table is, hey, if you're below this red line, look for shorts. Now, if your red line is, let's go on to a bullish day.
Do you place trades on the 3 minute? Is that your entries?
I enter trades really on different time frames. I don't, and the reason is I'm looking to enter at these support and resistant areas. I'm diving into trades, meaning when I see that, if I'm doing the opening range, I wait for this third 5-minute candle, is what I've been doing the last few weeks. And then when I see this Anthony Wicks come in here, rejection, and I'm here below VWAP, I'm just entering. I'm just doing a market order right in here. Especially when this candle comes in here. So I've got these three. I'm kind of looking. I want to make sure VWAP, that these candles, which could be bouncing off of VWAP right through here, once they're not here anymore, then I'm in. And at least I believe I'm good down to this area right here. But if I'm in the money right there, then I'll just, these 4-hour support resistance are really also important. But I'm just diving in, so it doesn't matter if I'm on a 2-minute time frame. I'm watching this VWAP. That's the nice thing about the volume weighted average price, is it's not a moving average based on the last 20, 30, 50 5-minute candles, 10-minute candles. It's an actual volume, spike that kind of determines that. These little volume nodes right here.
I've had much better success last week and this week by just having better entries and waiting for it to come, because before it was always like FOMO, oh my gosh, I gotta jump in, it's going, and I'd always lose. And so I've been waiting for it to come back to the VWAP or back to the 10, or whatever, and wait for it to roll over again. And so, yeah, I'm up 1,800 just doing that the last few days.
Okay, and I like what you're doing there, because And Kevin, this is not to frustrate you in anything way, especially when we like talk 10 EMA. Hey, where's our reason why candle? That does not go away. We're not saying we're not looking for that specific candle, be it, these inverted hammers or whatever. They're still delicious. We're looking for them. They're very good biases. However, we don't really want to look at like here's a beautiful 10 EMA candle on a 3-minute time frame. Okay, that's text. It's a beautiful candle, but it's so far away from basically our 10 EMA. But what Rhonda kind of did articulate, I mean, as long as I understood you correctly, and that's kind of what I was trying to share, is I'm wanting to see how price is behaving.
Mm-hmm.
That's where I want to decide if I'm going to get in or not. It's not necessarily because it might be the most perfect trend day, but what if I don't get that 3-minute, hammer or handle interacting with the 10 EMA where I need it? And plus, a lot of times it's down in here. It's like at a breakout. Well, then price turns around and goes against me.
Mm-hmm.
I am really looking for this. So even if I wait an hour, even if, don't even get in on this right here, because it's like, okay, I've got some resistance here. Well, what happens down here? Here's our 6:30. Here's our 1 hour market opening right here. 1 hour later, got a 4-hour resistance already in there. So it's a little bit past an hour when it comes down in here, but that's it. Now I have no problem going long again. I'm well below this red line. I get in here, but I am also very cautious. I've got VWAP on my mind, but I just start looking at, hey, I've got another 4-hour resistance right here. I get in, if I can, I will put a limit order in on these support and resistances right here, these 4 hours, because they're so powerful. But this is like 411 back up to that one right there. Well, that's 549. Again, there's over 100-point move.
Yeah.
It just takes one of those a day and it's done. From this line here down to this one, just one of those a day, I'm done.
So where you jumped in at the VWAP, right, like on that, right up there,
Yep.
I waited for it to go under that big white candle. And I don't know why, I guess.
No, that's smart. You're trapping a bunch of bulls right there. That's
So I
absolutely
just
nothing wrong with
waited
that.
for it to clear that, and then I jumped in, wrote it down, and my reason for getting out there at the bottom was soon as I see a white candle and it's been a bunch of black candles in a row, I just get out, take profit and get out.
And why not? Because if you're getting in
Yeah.
below this bull candle here, you're roughly at 720.
Yeah.
You see this white candle, even if you wait for it to get taken out, but 720 down to 593, there's 127 points.
And then I waited for it to come back up to the 10 up there. As soon as it started rolling over, I went back down again.
So you're
and wrote
below
it down again.
your fastest moving average, which is just a visual confirmation that, hey, price is still remaining below my most sensitive moving average that I have on my chart, be it a 10 EMA. This is a 1 minute 50 simple moving average, but it's no different than a 10 EMA. I mean, obviously,
and then I wrote it back down. And then as soon as something turned white, kind of, I thought, oh, I got to get out. So I cleared 443 today doing that. So that was
beautiful,
good.
Rhonda, beautiful.
Yeah. Finally, I feel like maybe I've turned a page. I don't know. Maybe I've grown up. I don't know.
And are you writing it down? Meaning, are you consistent with why you're getting in, and are you consistent of why you're getting out? Are you consistent of why you're re-entering?
I saw some tweezer tops, or tweezer tops, and then I was like, wait, it's gonna roll. Get out. Oh, and then boom, it did. So, and I can't remember where that was.
Yeah,
but
this is on a
I don't know.
3-minute.
It's just paying more attention to, instead of just fear of missing out, I think was my biggest problem. It's like, oh my gosh, it's running. I got to jump in. I'm missing the boat.
And that'll get you. That will get you. Now,
Anthony's sitting here laughing at me.
Because we've all done it. We all
Don't
Yeah, I
move.
know that
leave.
feeling.
Yeah,
Don't
still.
leave without me. Oh shoot, it goes the other way.
That's when you
The one-
find out you're on the wrong boat.
That's
And
right.
when it goes the wrong
Yeah.
way, he said, wait a minute.
I hate it
Yeah.
when this looks like a big bare candle breaking through this 4-hour resistance. Oh, I'm diving in right here because this is just solid black, and all of a sudden, boom, it goes right
Boom.
against you.
I
You
know.
know, that's
Yeah.
that's what we need to avoid. But again, how do we avoid that? Well, here's the thick line is the 10 EMA.
Yeah.
And I'm kind of just showing you how that. Here's a 50 simple moving average, 1 minute, and 10 EMA. Again, moving averages all give us the same information. There is no hard rule. You know, 10 EMA is awesome. You know, on a 3-minute time frame, there's some great setups, and if you apply that consistently, that is excellent. I just kind of like the idea is like, okay, 50 and a 50 and a 50 and a 50. These are all 50s. You know, lock into them, but there really is. I looked at the 10, I looked at the 1 minute. I'm like, you know what? It does not. They say the same thing. They're telling me the same thing. You know,
But
so
before,
that's the only reason.
I would never wait for it to come back. I would jump in halfway, and it was like, no, 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 I got to quit doing that. And so now I have a little more patience, wait for it to come back up to VWAP or the 50 or the 10 or whatever, and then write it down again. And so the last 6 days, I'm up $1,800. So that's good.
Beautiful.
Yeah.
I mean, because what we're highlighting here, here's 5 minutes over. It's like, okay, looking left. Okay, we do have support right there. That's a pretty bullish, bearish move. So already that gives me a little bearish sentiment. But how many times we just liquidate first couple 5-minute candles and then boom, she's up and going. And when we look at the daily chart, you know, here's our previous day's high up here. I mean, again, we could easily go back up to that previous day high just as easily as we come down to the previous day low. You know, again, we're diddling in the middle right here, but we need to wait and kind of see what it's going to do. Is it's just going to sit here and go sideways through here? Because if it's above VWAP, below VWAP, above VWAP, that's where I will trade a range strategy.
See, now
Hands
that's where I give all my money back. I don't know why. But it just seems like
Yeah.
that's where I lose every time. So I've got to be out before it does that. I have to wait for a trend or something, but I don't know what.
And
I don't know what
don't
I'm
change
doing.
that until you've paper traded and have an idea, because I'll go short when I make a new high, you know, when I'm range trading, because when
You
I'm
take
range
little bites
trading,
then, a bunch of little bites.
well, yeah, definitely doing that, but I'm
Yep.
expecting, I'm comfortable. Well, let's use yesterday, as an example. I didn't trade early in the session, but once we got up in here with VWAP clear down in here, look how this volume was decreasing.
Mm-hmm.
Previous day high, we teased that, and I got all these little Anthony wicks right here. I started 1 micro at a time. Every time we'd get a new high, I'd get a micro.
Oh,
Every time I get a new high, my strategy was, okay, if it's going to break, it's most likely going to break to the downside. So then once we started making these lower highs, I couldn't get in back up in here anymore. So then that starts, I'm just trading away. I'm only going short. I'm entering on these pullbacks, 10, 12 points at a time. Well, then I start staying a little bit longer once I start making some lower lows. And then I kind of hold on here just like for VWAP. I'm like, okay, that's my target now.
I've also been successful with a dollar cost averaging though, if it's gone against me. So
It's powerful, and especially if from a range trading perspective. In other words, if you don't want to go, you think it's trending up right here, you know, here's where, let's look at a 3-minute time frame. This is yesterday's. Okay, you know, again, if we kind of get in above this bear candle, I mean, that's really a good trade if you target the previous day's high. There's really absolutely nothing wrong with that. what does that look like? So it takes that out right there. It's just a large wick. You know, stop's got to be at least down to that area right there. You really don't have good risk to reward. But again, that's a good reason. But when I see that, when I see this candle right here and it makes me want to get in because of 10 EMA, I'll look for that still, but I want to look at getting in off of the 10 EMA. So here's the strategy. Here's what I'm looking for, but I'm done playing the breakouts. I'd rather go long here because if it does roll over, it's going to come back to the 10 EMA. And that's that DCA that you just kind of mentioned.
Yeah.
So if I do wait and I get in here at the 10, well, now I've just, instead of getting in at 834, you know, I get in down here around this 800. So I actually saved myself 34 points. And again, I've got my 10 EMA pointing up. I'm above the 50 simple moving average. Here's my bears confirmation that I'm in a good trade when I trap them, but I'm looking just for a better entry now. I'm done playing these breakouts. I very seldom will do the breakouts anymore. You know, because even if I have a breakout, you know, you're going to break out, it comes up and it comes down and retest it. That's your best confirmation that you're in the direction the right way anyway, is a retest of a breakout.
If it comes way down like that one wick, and I still go back to a higher time frame and see it's really trending up, I'll add another 1 micro.
That's the power of DCA, you know, is to add size when we're in the right direction.
And then do the same thing as you, then take them off and stair step, right?
Yep. Yeah. And just try to keep one, you know, try to keep a size going up towards your analysis says, hey, I'm going to target previous day's high. So really target was achieved right here, but it's volume starts decreasing. It's having a hard time right here. So I'm done going long at this point here. And now because it's so weak, things are starting to flatten out. My VWAP's clear down here, let alone my 50 simple moving average. And here's my 5-minute 50 simple moving average. Hey, what's the probability that price is going to come back and interact with those? It's very, very high. So I'm a lot more comfortable going short here than I am going long, really, even at these points anymore.
Yeah.
Even on these little pullbacks, I'm done going long up here. Just too extended away from all this stuff. And this volume right here is a good thing to kind of cautious. But another thing I want to kind of stress with the DCA is the number one rule is to, if you're in the right side of the trade, the right direction, you're trending, hey, adding one and then taking additional gains off while that, you know, you're 1 micro, you know, you're going for that 100 points on that 1 micro, you know, keeping it going, you know, that it's nice to say, hey, I got 1 micro, I'm getting in here at the 10, you know, based on this bear candle, this move, I'm going to get on the 10 EMA right here with a target up around previous day high. I want to keep that 1 micro in and really go for that target. That's the goal. Well, in the meantime, I'm taking 1 extra micro and picking up extra 10, 15 points, you know, on these different, every time it comes back to the 10 or a little bit below, I may pick up a micro right here, another 10 points.
Yeah.
You know, it takes me out right there. I pick up another one again. I'm taking another profit off the table right there. I pick up another one right here. And then I actually kind of hit my target right there. That's why I started getting a little gun shy.
Do you put a stop limit up there to, in case, what I've done is, depending on the direction, is put an opposing trade up there so that if that wick comes up and whacks it, at least I've got that high wick, right? So.
Well, that's where I'll have my target. You know, target's already set. So I've got a, you know, if I'm long, I've got a sell limit that is set up here. So especially if it's that 1 micro, and actually if it's my primary account that I'm leading on, and it's the objective of the day, I mean, I'll set that target up there. Once I get there, I'm done.
I've been able to grab some good gains.
Pick up a few extra points along the way, then I'm done that much quicker. Because I will turn the copy trader off, objectives met on multiple accounts, and if I'm going to continue trading, well, then I've just got 1 or 2 sim accounts that I'm trading individually at that point.
Mm.
And that's where I'll work on my strategy, my range trading, you know, the evaluation account, small size. It's a large account. That's another beauty about the 150 or the 250s, you know, because even, you know, just trading 1 or 2 micros when you're done trading officially for the day, but then I'll go in and I'll gain confidence in the DCA. And time and time again, I'm like, I'm on the wrong side. This sucks. I'll just let it go 150, even 200 points against me. Then I add, and then my average entry price drops 100 points. I'm like, all right, here comes power hour, or I'm bouncing off of this 4-hour resistance. And I'm just dumbfounded of how many times we recover. But that's another benefit of the larger drawdown, the larger accounts. You know, that DCA, you got a little bit more protection there. Again, the key is to you don't want to dollar cost average when you're in the wrong side of the trade as an offensive strategy. In other words, once you realize, hey, wait a minute here, I believe I'm on the wrong side now. I'm no longer making a higher high. My wicks are a little bit lower. I'm below my 50 simple moving average 1 minute time frame. I will let it go and not be too quick to add at that point, because now it's possible I'm on the wrong side of the trade.
Yeah, instead of trying to recover.
Yep, because if you add a couple micros and then it does go 100 points against you, you really put yourself in a bad situation.
Yeah.
But when you're still comfortable, you're on the right side of the trade, absolutely. That 100 points comes that much faster. Top step today, I went long fairly early, and I was just 2 trades, and I at $242. I was like, I was done.
Yeah.
And but it was just quick, and then I just traded the others separate. But that's, and I just say that is, again, I think even Julie was with me one time. We were kind of trading. We just got on the wrong side, and we kept going in, and at one time it pulled all the way back down just shy of VWAP. And if we would have actually taken just a small loss right there, it had nearly been a break-even day, you know. But it didn't quite hit the VWAP, and then it just continued trending higher and higher. By the time the market closed, it was a losing day for me that day, you know. But not terrible. Again, when you start talking, you know, just 1 micro, 150 points, you know, that was $300, so it was recoverable.
What's platinum per point? Do you know?
Not off the top of my head. Actually, I don't know if I've got it on. No, I don't have. I got gold mini. Yeah, I don't have. I'd have to go online to kind of figure it out. Unless we can look at it right here. Yeah, just that ratio, or how much per point, I'm not sure, Rhonda, off the top of my head.
Yeah.
So here's like a half a point. That's probably at least 100-fold right there. If I was to guess. If we were to get in 943.8. And say if we were to go up to like 944.8 right there. So that's quantity 14. $200 quantity 5, $200 risk. You know, 0.8 of a point. Yeah, 43.0 to 43.8 right here. So eight ticks is $200 risk on platinum.
Oh, well.
So if you go a whole point, well, that's where we are, like 90, we're going 10 ticks. Entered at 943.8, taking profit at 944.8, 10 ticks is $200 profit
Wow.
on platinum. So that's a good calculator right there. Tells you right there. So yeah, come in here and just, hey, I want to 1 point at a time. Again, quantity five, and yeah. Okay, so the biggest thing, the biggest takeaway, as far as how can we set ourselves up to obtain 100 points a day, net. One is, here's our first 5 minutes. There's our second, actually just 3 minute time frame here on the MAQs like this morning. Okay, we're a little bit below VWAP, and we've got basically nine minutes or three 3 minute candles right there. Okay, bear, not in a big hurry to get in yet. Not enough information for me to dive in is kind of what I'm getting at. 3 5-minute candles, 5 3-minute candles, or something about 15 minutes, and then start looking for some clear lower lows. I'm sorry, clear lower highs or higher lows. And then it shouldn't matter what time frame you're looking at. So here's on a 3-minute time frame. Okay, you got a nice little hammer right there. So if we were to kind of play a breakout or get in below VWAP, this could be indicative that, hey, we might be getting a little bit too early. Is it going to come back up and retest previous day's high? So again, this is that early morning, and we've kind of, I still got my boxes all drawn. I'm setting these up. That 5-minute candle, don't really have anything closing outside this range yet. So I'm kind of keeping my eye on that. Again, it's a whole bunch of different stuff. We're considering what has happened in Globex, what's happening in the first few minutes of the opening range, and 5-minute candles really do work well for that one there. So 5, 10, 15, here's that third 5-minute candle where we're kind of back up in this range. But here, this is where it starts getting interesting to me. Again, my VWAP's here. Am I going to be bouncing off of VWAP and continue up? That is something I have to wait and see. But the fact that we couldn't come up and take out this upper range, or not even come up and retest it, we expect a retest. But unless candles will close above this and then kind of retest, we're hesitant to go long up here. And so today is a pretty good day to where, for a moment, there was a bull candle coming up to touch the upper part of our 5-minute range, but it couldn't hold and it come back down. But we're still staying above VWAP. Okay, so this right here, strong rejection on the plus 10 minutes of bears. So the bears are feeding. Bulls are trying to overcome that. Here's where we get our first evidence, at least in the current time frame, that the bulls could not outdo the bears here. That's where, again, 5 minutes comes in pretty quick. But that's what I'm looking for. So now I'm closing below this 5-minute range here. So this is where I'm looking at kind of getting in at any place right in there. And this is where I like to be on the smaller time frame and look at getting in as close as I can to this 10 EMA or this 50 simple moving average right there. But if we were just to get in below, trap these bears right here, you got your 10 EMA on the daily down, clear down here, 150 simple moving average right to there. Nothing saying you can't look for a good entry point on a smaller time frame than the 5, but that's kind of starting to give us a reason to get in. 5, 10, 15 minutes, 3 5-minute candles. Looks like this is a beautiful hammer on a larger time frame. If we look at that on a 10-minute time frame, well, because of 5, 5, and 5, it wouldn't give us that. But look at the combination of these two candles. That's a beautiful hammer. but we've got nothing but resistance right here. Strong rejection right there. So I'll be looking at getting in below this inverted hammer right there. You got that set up right there. You're like, okay, what do I need to get 100 points? So if I'm getting in around 711.50, can I get out at 611.50 right in there? And that's where you kind of, I mean, really done for the day.
Quick.
If we wait to see what's happening in that first, this didn't take a full hour, but 5-second candle, here's your third 5-minute candle. I'm right in the middle. That makes it easy to not do anything.
Are you
And
still
that's-
taking your bite-sized chunks in that though? Or are you just letting it go and see where it takes you? With your 1 micro.
I actually, I'm targeting $200. When I hit $200, I was done, because that was like top step in there. I will take my copy if I'm copy trading, which I don't here. I'm usually just trading one, and I will keep them going. But yeah, I'll take my objective of the day. When it's met, I'm done.
I know, but I'm saying, are you doing your, 12 points here, 12 points, 12 points, 12 points?
Not quite as much. Not quite as much. I'm going for the $50. I'm going for the $100, a little bit more, kind of depending on the time frame. So a lot of it, I'm looking. I'm utilizing. You're making a liar out of me, because this morning, once we come down, everything hit this second line here this morning. I did nothing but 10 points coming back, because there was a lot of 10-point opportunities, and it was so bearish. So I did nothing but 10-point moves. So again, it was kind of market dependent. But when I'm not copy trading and I've just got a kind of a larger account, yeah, I'm kind of going in, and I'm going down to where I start seeing a little bit of rejection, but I don't just do the 10, 12 points. When things start slowing down, like yesterday, here's the conditions for that. Smaller candles, the direction is up. I'm getting in on these pullbacks, and I'm taking profits off the table all the way up. It starts really getting weak right here. These candles are not moving all that fast. But we're staying above the 100 and above this 10. As long as these candles were above these lines here, I was really only going long.
Gotcha.
And then we got up here is when I started going short. Coming back down in there. Yeah, to answer your question, Julie, once I identify like I'm in a range, or if I've got a trend, absolutely. That kind of just taking those profits off the table as they go. And if I'm on a small account and I can do that with 2 micros and keep one going, and then I'll take 10, 12 points on that second micro. But this first, what I'm learning, kind of guess what I want to better articulate right now, is this opening range has really got to be studied. We really have to wait for some evidence-based price before we get in. Or we wait, for that first hour. And that first hour today was right around in here. So this 4-hour resistance got taken out after the first hour. So that's another very strong confluence that, hey, probability is we're going to go down to another support zone. But now I could not make it back to VWAP. So I'm a little cautious to range trade. In other words, I'm cautious to go long. If I can't interact with this VWAP in this first hour, then we could be trending. And so that's another reason where I don't really want a DCA go long and then have it keep going against me and get in. If I can't see regular interaction back towards this VWAP, until I see that, I'm not one to add while it's going away from VWAP. Does that make sense?
Mm-hmm.
That's how I protect myself from getting in on the wrong side of the trade. And next thing I know, I have to add too much too quick to get back. I don't want to sit here all day while it comes down to here. It's like, okay, now I can add. I've got confirmation of reversal. We don't know how far it's going to come down. But if I add too many times, then I've exposed myself too much.
Yeah.
I need this, like right here this is 1 hour. We get rejected right here. We couldn't interact with this VWAP. So this is a big takeaway. Great point. So again, at 1 hour, because I said at the beginning of the call, that 1 hour, one of the benefits, it allows us to better assess, are we trending or are we going to be ranging that day? So here comes 1 hour. This is 6:25 Alaska time. We cannot interact with this VWAP. We are making lower lows, and look at our moving averages. So I have to assess, hey, I can't count on a range type of setup at this point. I've got to play the trend now. I have no clue in this first hour, because we could easily come down here at initial balance low, 1 hour. This could have easily ground and continued back up, at least up to VWAP, and then maybe rolled over. But I need something to tell me that, hey, VWAP, institutions or big money is interested in staying around VWAP today. And after this first hour, when we cannot interact with VWAP very easily, I'm very cautious, meaning I'm not going to just necessarily DCA on the wrong side of the trade. I've got to look at this as a trend day now. And that's probably one of the biggest takeaways from today's call is again, that 1 hour, or what's another piece of information we're looking for? If we're not interacting with this VWAP, it's trending down. Hey, you're really not in a range day at this point. But if this 1 hour initial balance low, if that is your low of the day, if this becomes support, it's a different game. Now your range, because you're looking at is this going to be a range go sideways and we'll come back and interact with VWAP? Or is it a reversal bouncing off the initial balance low? Or does it break through the initial balance low and get rejected and continue trending down? Those are the three things we have to assess. We will not be able to assess that until usually 1 hour. You're going to get a reversal. Are you ranging? Or are you actually in a trend? So if you stay below your initial balance low, you're trending. If you reject off of it, you've got either a reversal or a range at play. If you go back up here to the top, it's like here we've got 1 hour right here. Okay, we cannot break through this 1 hour. Price stays right. Again, previous day high becomes a very key marker there. Close to 1 hour, we're almost at a previous day high. So we have to ask ourselves, hey, are we in a trend? And it was not trending. We could not break through the resistance of previous day's high. Things are going sideways. We're getting rejected. So right around this first hour, all we got is some wicks. They're coming down. So now we're looking at this is a range to reversal. We start eliminating trend. In other words, hey, I'm not going long anymore at this point. I've got a range happening to a potential reversal. Volume going down and a lot of rejection at these wicks. We get that at 1 hour here. This is on yesterday. So that initial balance high could not become support. Therefore, we eliminate the trend. And now we say, okay, I can now range trade back to a reversal condition. That's what we got yesterday. Today is different. We get our 1 hour, but initial balance low, it breaks through that. So I eliminate reversal. I eliminate range trading setup. All I have is a trend. So now I'm looking to get in on the pullbacks and try to, how short are we going to go? We're trending down. We're making lower lows and lower highs. VWAP is not even in the equation. after this initial balance low was established. So that's powerful. You've got that opening range, being patient, wait at least 15 minutes. Start seeing what that third 5-minute candle does, and then start to really pay attention to Anthony's wicks. Hey, are those wicks really going higher, or are they really showing you some rejection? If the wicks are at the bottom, are they actually kind of looking like there's some support down there? And then wait until you get a clear direction. If you continue to go above VWAP and below VWAP, start considering, hey, it looks like I'm in a range scenario today. Okay, if you're in a range, feel pretty comfortable to go long at the bottom of the range. As long as you've got your profit below VWAP, that's a good condition to be in. If to make any profit at all, you have to like break VWAP and go back above it, even though it's a range day and you should expect it to. You might want to wait a little bit longer, at least 1 hour to kind of confirm you're in that range. But again, at 1 hour, we looking at from a range to reversal, or are we continuing in a trend? And that's what we should be focusing on at that 1 hour, going forward. That's going to help you figure out, how can I get another 20 points here? How can I add another 50 points to my realized gains today? But you may not know if you're in a range and can utilize VWAP until after that first hour to see what price is going to do from a larger U.S. market perspective. What are institutions doing out there? Are they going to continue is there more buying pressure or selling pressure that's kind of keeping it in a trend? Or is there just a lot of indecision and your range trading? You got to keep in mind, price generally, we're usually in a range of some sort 70 to 80% of the time. We trend about 20 to 30% of the time. Now you could change those numbers, manipulate them however you want based on different time frames. 1 minute versus 15 versus the day, what have you. But these, go ahead and we'll kind of finish up here. These big thick purple lines, that's I call them the 4-hour support and resistance, but I will kind of tweak them, tighten them up as price does behave. But for the most part, these were all on here. And it's kind of crazy to kind of look at, here's all my 4-hour support and resistance. I just kind of keep on there. What I guess I'm trying to articulate here is I leave them on there and it blows my mind away of if one purple line, if it breaks through it, retest it, I can almost expect it to go back down to another one. Same thing here. It breaks through again. Am I going to go all the way down to another one? I can almost expect these bounces. So when it comes to a DCA or anything, I will a lot of times wait just at these purple lines are the only time I'll even consider adding to recover a trade. And before I would add here to recover a trade, I want to make sure that I'm comfortable to ride it down to the next one. So if I'm not comfortable to add here and ride down to here, I wouldn't add here. Let's say if I got in up here, I would wait till I got down here. And again, that's just depends on where you are in your account. And if you already have 2 in there, that's where I'm a little more cautious. I'll get up and walk away. And it's kind of eerie. It sucks to get in a trade, have it come clear down here. And it's like, well, what if it doesn't stop here? If it doesn't stop here, then it's kind of like game over. But it's like, I think it will. But I was actually down 400 with a 1 micro down to here, and then I get everything back right to here plus some. But that's why I switched over to a mini and took 10 points. Once this candle come in right here, so it might have been I was a little kind of ticked at myself because that was kind of a tilt move. But it did work out very successfully, because if it would have rolled back over, I would have lost 30% of all my accounts today. Right at that 30%. But I ended up being profitable on minis right through here. That's where I took 10 points at a time. So, and that was just to protect. I wanted to get in real quick, didn't have confidence because I really didn't expect to come all the way down to here. I was expecting kind of a triple bottom here, coming back to VWAP during this is 11 o'clock, so an hour before the market's closing. I was really expecting a little stronger move, especially when this candle came in right here. This is what got me. And again, goes back to, I never did close above this 1 minute 50 simple moving average. And that's what I'm finding out. It's like when I look back and I journal, I'm like, Jake, you don't do well if you're DCAing or you're adding when you're still kind of candles are closing below this 10 EMA or below this 1 minute 50 simple moving average. Wait until you start getting back above that. Here's where you start adding more size and come back in. Mark's getting ready to close. Is this like the power hour? Here's my 5 minute simple moving average. So that's my takeaway is I'm learning, don't add if I'm still on the opposite side of that 10 EMA or that 1 minute 50 simple moving average. More times than not, it's going to continue that direction. If you're going to add, unless you get something really clear like this and the time of market, but really candle closes above this 50 simple moving average, second candle comes in, closes above it, that's a low risk reversal where you can now add a little bit more size, get in, get out, get in, get out. Just if you're wrong, if it rolls back over below this 10, just you don't have enough time in the market to add anymore. You're wrong.
So Jake, if I'm following you correctly, you wouldn't have added when it hit the 21,289. You would have waited until those wicks, I'm sorry, not the wicks, the candles came back above your 1 minute simple moving average.
Right. I'm trying to think of what I did do here. You're exactly right. Here is what, because I did not wait for this getting above this 10 or above this 1 minute. If I would have done that here, I would not have added at this support, because I never did have any bullish other than thinking this was support, and I'd predetermined I was going to add when we got back down here. But I am starting to, I missed it today, but a lot of back trading. I'm like, Jake, you never do well when you're adding, when you're in the trade below your 10 or below this 50 minute, 1 minute, when you're below it, don't go long. Don't add to go long until you're above that. That's the rule that I'm validating and writing down. This candle, this support is why I think I did get in here, because otherwise I took some profits here, and about here on the NQs, not the E-minis.
Even though you got back in, I guess, above the 1 minute.
Let's
Once
see
the candles close above the 1 minute simple moving average, the point is that you hit that lower resistant level, and that was a key reversal. So you felt more confident to buy back in once it was above that, right?
Yep.
You have two reasons right there.
What I'm saying is as a rule, definitely consider don't getting in until it's above that. I can't look in the eye today and say that's what I did today. So, but what I'm saying, Jake has learned, don't, and I'm hoping that these would show up today. Ooh, let me look at one more thing, make sure I got the right account up here. Because if the historical trade's there, I just want to show exactly what I did do. But they're not showing up, darn it.
I'm just trying to focus on what you're getting at here, because when I DCA, my challenge has been, I think I've DCA too soon and the market kept going against me. And that's
Okay.
where you have a trade, you did 1 micro, and next you know you're at 4 micros because you've done it too many times.
All right, let's focus on. I was hoping this, because this is the account where I did a lot of it in. I'm on a 2-minute time frame. This is a nice reversal. I got in when this candle come in, and I started adding, and I switched over to the NQs, and so I rode this all the way up. I got in on these little pullbacks of these candles, took 10 points at a time. Okay, once we got up here, and actually right here was my last trade. I was done for the day. I recovered everything. That's what I ended up doing. What I should have done, and I believe this is answering your question, is because of this right here, I should have never added. Never did have the adding criteria met until here is where I should have started. This is where conditions are met. If you're really patient, if you're on the wrong side of the trade, anywhere up in here, or even in here, what I'm finding is if I wait until I'm back above this 1 minute 50 simple moving average, then the probability of being in a reversal and being able to lower this average here, it goes through the roof. It's much better. So that's what I wanted to share is consider not adding when you're below your 10 EMA or your 1 minute 50 simple moving average to recover a trade. Utilize back above it as some reversal criteria. We want to get in as low as we can. We want to get into support, but I got in at this support right here and it bit me in the hiney. And that happens to me a couple times, every once in a while. And it is still okay because I've only got 2 micros, but I'm down now $400 with a $1,500 drawdown when I get back down to here. That is more than I like.
Yeah.
Okay, that's approaching a third of the account right here. That's
No,
not as fun
thank you
to
for
trade under
emphasizing
those
that,
conditions.
because
Or if I would have just kept 1 micro, I'd have been absolutely fine here. And now it's like, okay, I've got my reversal here. Market's ending. I might go 2, I might even go 3. But then I'll be taking like 2 off every time I get 10 points. That's where I'll set a target of about 12 points, maybe take 2 micros, wait for a pullback, buy 2 more, and I'll keep my 1 back up in there.
okay, thank you.
Yeah, but this is the criteria that I didn't do that today, but the reality is that's the rule that I'm developing right here. I forgot I got a trade. I'm about ready to hit target over here. All right, I want to summarize because that was a lot of good information. Moving averages, I don't want people to get wrapped in the weeds on that. Utilize what you're comfortable with. I'm just experimenting and I'm really liking the idea that, hey, that red is a 1 minute 50 simple moving average. Regardless if I'm at the 2, 3, 5, 1 hour, that is the moving average for 50 1-minute candles. This green is the moving average for 50 5-minute candles, 50 simple moving average. So now I'm rewiring my brain to understand the relationship between 50 1-minute candles, 50 5-minute candles, because then when these crossovers happen here, now I'm starting to realize that now that's really stronger reversal criteria. I'm still below my 15-minute 50 simple moving average, but what happens when my 1 minute 50 simple is back above my 5-minute? Again, just wanting to have some rules-based confluences to say, hey, even though I've got kind of a downward trend, is it safe to go back up now? And having some consistency in the moving averages or how you're looking at your charts can help you kind of identify that a little bit easier. We haven't talked a lot about that initial balance high, initial balance low throughout many sessions. Initial balance high and low being defined as is, hey, what is the US market highest price achieved or lowest price achieved at the 1 hour mark? Okay. Now taking that initial balance high, initial balance low, and let's just rewind our time together from the beginning. And it's always been brought up, there's a lot of folks out there that just will wait 1 hour. And there's absolutely nothing wrong with that. I have a lot more respect for that because 1 hour now gives me more confidence to identify, hey, am I going to reverse because we've had this volatility in that first hour? It's the market's done a big part of its move, and I'm looking at, am I in a range? Are we going to go sideways back towards VWAP if it went down, or if we went up, are we going to go kind of sideways back down towards VWAP, or are we going to be trending? And if that 1 hour can become support, well, then you're trending long. If that 1 hour initial balance low becomes resistance, well, you're trending. But if that 1 hour low becomes support, well, now you're in a range to possible reversal. If your 1 hour high becomes resistance, you're in a range to possible reversal. That's golden. I really hope that's making sense, because that's really what we have to identify. If we're going to trade after that first hour, is it reversing or is it going to go sideways to possibly range back towards VWAP? Because VWAP, probably 7 out of 8 days out of the week, you're going to return to VWAP. If you're above it, it's going to come back down to it. If you're below it, it's going to go back up to it. But days like today, it did not. But our 1 hour price became resistance. So you take the range off the table and you only trade the trend. That's where we give it all back. How many times, Rhonda, we've talked about that? 1 hour, we're good all the way down and we think it's reversal. And so then we end up giving it back and it just kind of keeps rolling over and going lower and lower.
Hate it.
That's the value of kind of waiting, or respecting that 1 hour and waiting for that other phase of the market to give us a little bit more information. Because if that initial balance low or 1 hour low does hold as support, now you can start looking at VWAP as a valid target and say, hey, I could be reversing. Or if you're range trading, get in at the lows. And as long as you got a good target between where you entered and VWAP, you've got a high probable setup. That's the takeaway there. No guarantees, but you've got a high probable setup. But if that low becomes resistance and you're in long, it could be a long day, and no pun intended. It's going against you. So I don't know. It's going to be it's a short day. You know what I'm saying? I'm confusing myself. It'll be a long day because you're on the wrong side of the trade. It's a short day, even though it feels long.
What?
Well, yeah. I'm sharing my journey, and I have absolutely enjoyed me decreasing my size, doing the math, understanding the relationships between the small accounts, the large accounts. I'm like, good grief, I fund and I get paydays quicker in the large account. I trade the smaller accounts. That's my psychological edge, because I only have to trade with one micro. I can see it go down $200. It doesn't bother me. I don't like seeing things go down $600 and $800. And so I just forget that, and that's where I'm kind of copy trading, because if I can recover, a small account, well, I'm recovering the large accounts. That's been kind of cool. I love the opening range. I don't copy trade the opening range. I usually got 1 or 2 accounts, still studying that, because biggest opportunities are there to win and lose, because it's so fast. It's so fast. And even DCA, I've recovered a lot getting in on the wrong side of an opening range, but yet those are 150 point swings a lot of times, and it's rough. It's rough when you've got a trailing drawdown. And so I will usually trade one or two accounts, profitable overall, but I just don't copy trade, that opening range. And then I'm looking a lot more at, I've got confirmation we're in a range. When VWAP is part of the session, that to me says, hey, I'm in a range of some sort. VWAP is a safe place. As long as my target is between entry and VWAP, and I have confidence that VWAP is going to come into play before the end of the session, I love those days. And those are my best trading days. But I really cannot make that assessment until after 1 hour. That's what I want to share.
Good stuff.
So, and again, one last repeat. You know how I love to repeat, because I always mention it. But Anthony, I'm always thinking of you when I see wicks. Because this is a very bullish candle at one moment, and that's where, again, just waiting. I'm in this. It's inside of this whole range from Globex. And when I learned, it's like, hey, wait a minute, 2, 4, 6, 8, 10, 12, 14. Here's my 15-minute time frame in here. I'm back up in this middle. And so there's so much information to know I don't have enough information to get in right now. That's a lot of information right there. To know not to get in at this point. But when you see these lower wicks, these rejections, and you start kind of seeing, and again, your moving averages aren't necessarily so clear at that point. They're clear up here. But when you start waiting for candles to close and kind of give you the whole picture, that's beautiful rejection right there. But I still above VWAP. So I'm not real comfortable go short. But this rejection right through here, in fact, we could make it up here, starts giving me some confidence. And so that's where, like on that one account, 2 accounts, I'll look at getting in below VWAP. I'd like to see this taken out here again, though.
Gotta run. See you next week.
Start looking again. We'll see you, Rhonda.
Bye.
That's a good cue right there that I'm talking too much. But yeah, so what happens when we have a couple of weeks off? It's been really good for me trading. At the end of the year, finished really strong. And starting off really good, and I'm continuing to really tighten up the reasons I'm doing what I'm doing, and I'm hoping to be able to convey those to everyone. Again, I'm doing better by slowing down, and doing better by being intentional to say, hey, are we trending or are we in a range? Reversal to range versus continuing a trend. That's what I'm really trying to convey today. Because if you can get an edge to start identifying that also, I believe you're all going to be that much better. So any go backs, any questions? All right, everybody's muted, but I don't see lips moving, so I think we're good to go. Happy New Year to y'all.
Happy New
Happy
Year.
New
Happy
Year.
New Year.
Yeah. And
Yep.
just you got to remember, the most important thing is to enjoy when you sit down to trade. If you're not enjoying it, consider the size. Consider to a very strict rules-based approach to take some of that stress out. And this must be enjoyable. And then you're going to find out you're going to get into a zone from time to time. And range trading will be fun. Again, just paper trade it for the time being. But it is fun when things just start bouncing up and down, 20 points, and they do that. It does that for about an hour, and you happen to just catch one of those and just, yeah, those are the fun days. Those are my biggest winning days is when we're actually arranging the past 30 days. But just being able to identify it. You know, if you're still making lower highs and lower lows, you're really not in a range. You're really not in a range. So, all right, we're gonna end it there. I'll get this processed and recorded and get it dropped in our group.
Thank you.
All right,
All right.
All
thanks
right,
a lot.
have a good evening.
You
All
do the
right,
same.
take care. All
Bye.
right, bye.
See ya, Susan.